Hey, to all my loan officer friends out there, had something come up recently that I wanted to comment on. So, if I said in conversation that there is a serious lack of transparency in the mortgage business, what would you think I'm talking about? Last three conversations, I've mentioned that to a loan officer. Their response was not negative, it was agreeing, but they thought I was talking about the level of transparency between loan officer and client. That is not what I'm talking about. I'm talking about, and of course, this only goes for people on the retail side. People on the retail side really don't know what their actual charge to the consumer is. Now, when you come aboard and you're hired, you know where your pricing is that day versus what your compensation is that day. But what you don't know, and what can change at any time, is the corporate margin can increase or decrease, but mostly it's going to increase at times of need. And keep in mind, your compensation does not increase with that. So when I say there's a serious lack of transparency in the mortgage business, I mean, you're out there selling rates that you don't even know how much is packed in there unless you're really, really high up in the management area. Those are the only people that get to see raw pricing, is typically people who are not making money through loan origination activities. Those are the people who get to see raw pricing. Secondary desk, serious high-level managers that are non-originating. They're making an override, their hands in the cookie jar off of all production. So they see raw pricing, they know what's packed in there. Keep in mind, the bigger the company, the bigger the risk. You know, the bigger the company, the more people they either had to lay off or the more people they have to pay for, you know, with your loans. If we're running at 30% capacity from what we were last year, you have either seen a huge amount of layoffs or you've seen a huge price increase. And by all means, the best time to do this is when rates are going up. It's because we typically don't see it as loan officers. When rates go up, we're just, you know, it's easy to hide margin. You just do it a little bit at a time. But I can tell you for a fact, I'd say 90% or more of you have probably seen a margin change in the last 12 months. That is more than likely going to be the case. Can I say it factually? No. Based on my experience in the mortgage business and knowing what happens at the higher levels and knowing costs and expenses and cost per loan, yeah, that's probably what's happening. And I guarantee you your compensation didn't go up when those margins went up. So, you know, I'm just saying, be conscious of the transparency. Here's what I can tell you. On the broker side, we're capped at 275 basis points. I've been with Nexa Mortgage for 3.5 years. And I can tell you every single loan I closed, I know where every penny went on that loan that was charged to my consumer. I know how much was charged, the actual charge, and I also know where every red cent went and who got paid what on that charge. And I can also tell you with 100% certainty, my margins have never gone up. Ever since I've been here. So there is a strength to that. There is a strength to being transparent. Look, we're coming into the new year. There's going to be a lot of changes, maybe a lot of people considering a change. I applaud you if you're brave enough to consider a change. You know, I will tell you that the broker side is way easier. You know, you have more options, you have better pricing, you have more freedom, you have more autonomy. I don't see the downside unless you're somebody that doesn't typically want to run your own show. If you like the cloak or the security of somebody else kind of helping you along, then you're probably not a good fit for the broker side. Probably not. It takes a certain entrepreneurial spirit to be a good fit on this side, because you do have to go get it yourself. You do have to, and you are solving the problems yourself, which is a great thing for me. Give me the ability to solve my own problems. Man, you were saving me so much time and energy. You know, other places will put you in line and they'll solve the problem for you on their time. I'd rather do it on my time. So, you know, just saying, think about transparency a little different. I think for the most part, I think most loan officers are pretty transparent with their client. But I would say for the most part, your boss or your mortgage lender is not transparent about their margins. They don't have to be. They're not obligated to be. They're obligated to keep the business running. And are they wrong for raising margins? No, they're not. They're keeping the business alive. I don't think they do it out of greed. I think they do it out of necessity, because that's what keeps the lights on. And there's less loans. Understand, nobody gets paid without a loan closing in this business. You know, brokers just have it a lot thinner. We don't have the same overhead. We don't carry the same risk, the same weight. We don't have buybacks. We don't have, you know, it's a huge difference. So, hey, with the change coming along, take a moment. See if you can carve some time. See what the difference is. Explore your options. It's not so bad, I promise.